Welcome to another video. If you're new to the channel, I'm a top author on TRADINGVIEW platform as well as running an educational company and swing trading full-time with my students. As usual, I want to give the best value to all of you. So today we will be speaking about how you're supposed to structure your trading strategy and what you're supposed to actually implement and have as your rules for a strategy. Obviously, I will not share exactly my rules, but I will help you guys develop your own strategy. So without further ado, let's get straight in the video and give you the foundations on how to develop a strategy. Okay, so let's speak about which are the steps when you are developing a trading strategy. So mainly there are 3 steps. So the 3 steps are these ones. First of all, you need to set the rules of your strategy. That is pretty clear. You need to set the rules of your trading strategy. The second step is you need to backtest the rules of your trading strategy because you need to be sure that the rules are actually working. So how to do it? You get past data and you actually start backtesting it. So seeing if the rules of your strategy actually work or not. And this is something that most people are not doing. And it's very, very bad. It's crazy. First of all, there is the biggest mistake. People trading without a strategy. How many people that there are trading without a strategy? Is full, because all the people asking me, what do you think about this pair? What do you think about that pair? Clearly, you're not having a strategy. It's different as watching my analysis and seeing, okay, and saying basically, okay, this is your view. It is actually matching up with my strategy. But people asking me, should I buy or should I sell? You're supposed to follow your strategy. If you're asking something like that, should I buy or should I sell? You don't have a strategy. What does it mean? Nobody knows if you're supposed to buy or if you're supposed to sell. What you're supposed to be doing is following the rules of your strategy, and you will have losing trades, but in the long term, you know that your probabilities, you know your risk to reward, and you know that if you're applying that set of rules, then you will actually inevitably be in profit because you have an edge over the market. So asking, should I buy or should I sell? That means you don't even have a strategy. So biggest mistake, not having a strategy. Second mistake that I see. People that have a strategy, they supposedly have a strategy, they say they have a strategy, but actually they never backtested it. Which is a very bad thing because you're trading something that you don't know if it's actually profitable. And trust me, most of the times it will not be profitable. So you're trading something that you have not tested. It makes no sense because there's a big probability that it's actually not profitable. So you're trading without an edge, or better said, you're gambling, because if you're trading and you don't have a statistical edge in the market, it means that you're gambling. You're not really trading. So first step, setting the rules of the strategy. Second step, backtesting the rules of the strategy. Third step, you have to live test the rules. This is the last step. Okay, you have set the rules, you have backtested them, and you have clearly seen, okay, these rules actually work. This strategy actually performs in this way. For example, it gives you a 40%, 50% return a year, risking 1%, 2% risk per trade, with a statistical average risk to reward of, let's say, 1 to 3, 1 to 3.5. And that is basically what you get from your backtesting. Then what do? You go and live test the strategy. You start trading it, possibly not on a live account when you're live testing a strategy that has never been traded before because you just developed it. It's extremely important that you don't just go straight into it without first live testing it. Okay. After that, you have the rules, you have backtested them and they work, you have live tested it and it works. That is the point in which you put as much money as possible in your account and you start trading, and that is when you're not gambling. That is where you actually start trading because you have an edge, and you know that in the long term, if you're applying that set of rules and those rules are tested, then you will inevitably be in profit in the long term. And that is the only way in which you will basically not end up in the circle of doom. Now, what is the circle of doom? I like to call it in this way because it's something that I see many people fall into. And this is basically what they start doing. They have a strategy, okay? They start trading the strategy. They never tested it, okay? They start trading the strategy. Let's say at the beginning, they win 5 trades, okay? And they had an average risk to reward of 1 to 2. So they make, let's say they were risking 1% per trade and they make a 10% return. Then what happens? They have a losing streak, okay? They start losing 1 trade, 2 trades, 3 trades, 4 trades, 5 trades. And they say, okay, this strategy is not working anymore. I'm having all these losses. These people have zero trading psychology. So they just, okay, I have to change strategy. I have to change it. But why are you changing something if you're still in profit, first of all? Because at that point, in the example that we just made, they're still in profit. Because if you win 5 trades and lose 5 trades, you have a 50% win rate with a 1 to 2 risk to reward, you're still in profit. But they change the strategy. Or even if they're losing, it means nothing. Even if you're in a drawdown, also in basically a net drawdown, so you're actually down on your account. If this strategy works, you're just supposed to continue applying it, because you will get the results that the strategy is supposed to give in the long term. But anyway, what they do, they just change the rules. They tweak the strategy. They change strategy. They go to another strategy. And let's say in the beginning, okay, in this case, just immediately 4 losing trades. And they change strategy, right? They change strategy. Okay, this strategy is not working. But imagine if this was actually a great strategy. If they would have taken 100 trades with this strategy, they would have made a lot of money and they had a profitable strategy. If this was a profitable strategy, then they would, over a 100 trades, they would have been in good profit. You have to understand the big numbers, okay? You have to take a big number of trades, 100 trades, to see your statistical edge actually play out. You can't just, if you have a strategy, let's put it this way. If you have a strategy that has a 60% win rate, you take 10 trades, you will not win 6 out of 10, okay? It's not how it works. Over 100 trades, it might be 60 trades won. Over 1,000 trades, that is where statistics begin basically to become very true, okay? Over 1,000 trades, it might actually be the number very near to 600.
If you have any ideas for a new video, make sure you drop it down in the comment section below and I will be happy to make a video on those topics.
You need to understand that you need a big number to actually see your statistical edge play out. That is why it's important that you backtest it over a big number of data, over a lot of trades, and then you live test it, and at that point you start trading it 100%. You know that it works. You don't have emotions because you know that you're just testing something that already works, and at that point there is where you have this is where you're actually trading, because everything before this you're not trading, okay? You think you're trading, you're not. You're just giving your money to big institutions and market makers and traders that know what they're doing, basically, instead of just knowing, stay on the sidelines and focus on learning instead of just wanting to take the money of the market. Many people just come here, they think it's easy. It's not, okay? Many people will show you their cars, and rented, by the way, and just tell you that they know everything and trading is so easy. Just come here, open an account, and you will lose all your money. So this is basically how the circle of doom works. You just keep shifting strategy. In the end, possibly you end up at the same strategy you had at the beginning. But if you still don't test it, you will keep going on in this loop. So not very smart move. So set the rules, backtest the rules, live test the rules, and then put as much money as you can and trade without emotions. Now, when it comes to setting the rules, 3 steps. Direction. You need to have clear rules, which patterns you want to see. Let's see, you also incorporate order flow, your analysis, what kind of order flow you want to see from hedge funds and banks. And basically you need to have clear rules. Okay, if this condition is satisfied, if there is this pattern, I have a bullish view on the pair. I have a bearish view on the pair. Those are valid direction, basically rules. You need to have clear rules on what direction are you picking on the trades, on the pairs. Second step, entry rules. Which conditions you need to see satisfied before you're taking your entry. And when I speak about entry rules, I'm also speaking about where your stop is and where your take profit is. Do you have, for example, a trailing stop? what are you doing? All the conditions that regards entry, take profit, stop loss, how you're going to manage the trade, so how you're going to trade your stop loss, when you're going break even on the trade, and so on and so forth. Third step, risk management. How much you're risking per position, what is the minimum risk to reward that you want on your trades. Now, what does it mean? What is the minimum risk to reward that you want on your trades? Let's say your strategy has a statistical, I will take a bad example. Let's say your strategy has a statistical 30% win rate. Okay, you have a strategy that is quite unlikely, but you have a strategy that has a 30% win rate. Okay, you will win 3 trades out of 10. Obviously, as I explained before, that is not the case, but let's say you will win 3 trades out of 10. Which is the minimum risk reward that you need in this case? It is a 1 to 3 risk reward. If you have a 1 to 3 risk reward with a 30% win rate, you're still in profit. Okay, so in this case, it will be a 30% win rate. So trades that are below 1 to 3 risk to reward, you will not take them because it makes no sense for your strategy. Okay, because you will actually lose money in the long term because your strategy has a 30% win rate. I hope you understand these concepts because they're extremely, extremely important. If you're not understanding them, go back and rewatch the video. These are very, very, very important steps. All of this is extremely important, and I know by a fact, by the questions that I get every day, that this is something that is not clear. So make sure you understand this and you actually do it. This is the best suggestion that I can give to all of you. If you don't want to just learn my strategies, you could just join the mentorship program and learn my strategies. But I'm not trying to sell you this now. Okay, what I did today is tell you basically which are the steps to develop a strategy. So go out there and develop a strategy. You don't necessarily have to learn it from someone. That is something I'm telling you here. You don't necessarily have to learn it from someone. This is very painful, okay? It will take a lot of time. It will take a lot of money. Not really money if you don't basically never arrive to the live testing rules. First, you have to develop. This will take a lot of time. So, okay, setting the rules, backtesting the rules, and finding actually something that works. That is what will take a lot of time. If you make mistakes in this will take you also a lot of money because you will lose money in your live testing. But it's worth it, okay? It's worth it. If you're not interested in investing money in your education and learning strategies from somebody that already has them, it is worth it because you don't really have any other options in that case. If you're not interested in investing in your education, I would say you're not even supposed to be trading in the first place, but there are people that are like this, like, I will not spend money on any courses. Okay, you will not spend money on any courses, but you have to spend time and money basically in the market then. So yeah, these are the steps to develop a strategy.
If you enjoyed the video, make sure you smash the like button and comment below. It really does support the creation of more free analysis and education for all of you. And obviously these lessons like this one that are very valuable and that can help you develop your own strategies and in general become a better trader. If you still haven't, make sure you go and check out the mentorship program. You can find the link in the description, and it's a very complete program. You first get all the rules of my strategies and then you trade them live with me each and every day. I give you a new daily market breakdown showing you exactly which pairs are satisfying the rules for entry, how to take the entry, and basically guiding you after you have already learned the strategies, as well as answering every question that you have each and every day in video format, so that basically you get the best value from the program as possible and you basically become a trader that is independent and know exactly how to apply the strategies.